Good morning. It is almost 11 UTC. Just looking at the liquidation charts for Bitcoin. I had a nice little pop up move from yesterday. Again, getting a nasty squeeze, but it looks like now we're actually squeezing into the upside as predicted. If we had some upside movement, we're now seeing some more shorts coming in, which we'll go through as well. The big thing here on the chart to keep an eye on is literally at the highs here, 61.6. There's quite a bit of local liquidity. It's 300 million. And just in that small area, you're talking about a billion potentially in short liquidations if we start breaking through stuff really hard. In any case, the local stuff looks really good. If we start failing the downside, I'm not interested until we start getting below 60.5K. Then there's a potential failure back down to, locally to 59.5, maybe 60K holds. But it's not a whole lot of liquidity. If we do, the stuff that really starts to matter is breaking the lows that we had from yesterday. So 58.3 really is the level not to break down underneath. We can still bounce from any of these levels, but getting below that, we have to start looking at the high leverage longs below that as well. A little bit of higher time frame just to give perspective of where we are in the overall movement here. So we do still have quite a bit of short liquidity. I think that could get us easily into the high 64.3. There's a ton of stuff, not even just the local stuff, but the real big juicy stuff is at 62.8. The highs that we put in back on the 9th. So keep an eye on that. That's if we have that kind of squeeze through, which we talked about, that's going to be the move up into that structure. And then again, losing the local priority here. It is technically, still trending up. I would say lower time frame. You're failing to make new highs, obviously. So any new failures from the lows, 68.3, oh sorry, 58.3, that's when we would start to see, some downside, some retests of some of these previous structure. But short liquidity is definitely thicker to the upside than longs after that major flush out. So I also wanted to mention, as expected, we talked about how we were getting a 2-to-1 long to short, so it looks a bit rough. However, we started seeing new shorts coming in as soon as you start squeezing to the upside later on in the afternoon. And since then, we've seen quite a few people trying to short into that structure, which is good. We want people to short into upside movements. It's coming up a little bit, like just slightly, some people trying to long into it. But the fact is, from about what 16 UTC yesterday through the market open all the way into the evening, we saw a lot more people trying to short that, which is good to see. So in any case, it's still looking decent for potential squeeze the upside just based off the liquidity and the long shorts. Looking over at trading light to see resting orders, nothing stepping in above us for as far as that goes. Also, CPI data comes out in I want to say an hour and a half. If CPI data comes in positive for the markets, like PPI data came in yesterday, which we talked about, which was lower than expected. So lower than expected data for PPI and CPI, inflation, is generally bullish for the markets and bearish for the currency. So that's just something to be expected there. And like I said, you're looking for that squeeze up into that kind of thicker liquidity as the big block that we saw coming in end of week last week is completely gone. There's no big orders put in here in either direction, really. But yeah, watch that. Looking over at the TPO as well. Now we've got a really nice solid one at 60.8. So if you're looking for some lower time frame failures that could bring you back down to the lows, look at a failure at 60.8K. I say that's kind of like the bigger local failure that could kind of get you back down to the lows. And if there's a continuation failure there, you want to get back down towards somewhere around 60K to about 59.8 at the minimum, some localized failure, which could continue all the way down to like 59.5, obviously, but you want to start breaking stuff, which right now the most local price action is what we did yesterday, right? So we have to take that into consideration the most, which is, are we gaining levels? Yes, we are gaining levels. What about the previous ones? No, not quite yet, but we're still gaining. We gain the range now to go higher until we start losing it to come back down and do maybe even like some type of mid-range retest coming back down to like this structure around 59.5. But who knows? For right now, it looks like we're playing out the squeeze into the upside where basically price goes up. We start to kind of like doing this consolidation up. It gets tighter and tighter until eventually all of the shorts that are stacked here, they get squeezed through to the upside. That still looks like the game plan again until we lose that, in which case we're looking for a localized retracement. So if you do have those longs still in from the lows or from yesterday, yep, still valid. Absolutely. Watch the upside. Shorts from previous high levels, yes, obviously still also if you're hedged on this structure, but if we do start breaking down, just keep an eye on it, but I like the idea of potential squeeze up. It's too clean right now. And a lot of people, as we see shorts coming in and decent amounts of liquidity upside, not really trying to short it until we have a clean break of the local structure. And then finally, on the footprint, just to give perspective on orders here, there is quite a bit of bullish delta. That's, at 60.9, that's not being punished. 60.8 is not being punished. So again, 60.8 also coincides really nicely with that TPO level, which we saw, or the point of control. So if we do kind of just overlap that, obviously, if we do start breaking that, it would put all of these longs that are in place at risk to break back further. So keep that in mind. Finally, looking over at trading view, there we go, trading view. The general plan here, we had the step off move yesterday. It wasn't clean. I didn't like it. But at the same time, it was pretty clean going into the afternoon, right? Bullish, pop below, demand created at the weekly open. So that's always a positive sign. Bullish back test of the daily open, and then continuation full send. So it's just, gain and go, and then pop all the way back up to the highs. So it still looks nice. I think we're playing out the squeeze move right now. That's invalidated very simply, either from, if you're trying to take local failures from 50.8, but the more clear failure would be at like 60.5, which would constitute a breakdown to go back and retest untested stuff below. If we do have a big breakdown, especially going into the CPI data release, watch for bigger higher lows so we could flush all of the local longs, get everyone feeling really bearish regardless of the numbers. Keep an eye on that. It's going to be a factor where if the forecast is not as expected, it's definitely going to play a big role in the markets. That comes out in exactly now an hour and a half. So 12:30 UTC is when that's going to be released, I believe. Or yeah, that's right. 12:30 UTC. But the big upside there to think about with that economic data release is that if inflation is coming down, PPI is coming down, this further incentivizes the FOMC, the Fed, to lower interest rates going into the September meeting. And if that's the case, if we start lowering interest rates, you're going to see some massive increase in volatility in the market. So definitely something to keep an eye on. But that's it for now. Watch this intently. I wouldn't say if you're blindly if you're not in a position at the current moment, I would say be cautious, because again, big volatile economic release data is coming out in an hour and a half. So if you don't want to see that kind of local failure, that's fine. If you want to play that out, we're still technically, uptrending as long as we hold like some local low structure. I think it looks fine. If we have a deep breakdown, we've got demand, we've got support, we've got a lot of things going for us if that's the case. So in my mind, I'm still pretty positive of it. Quite a bit of short still in place in the market that could easily get us back higher. We're still technically in a resistance zone, but we've got 1 hour and 4 hour demand below us. And until this fails, I'm not overly bearish. I'm actually still expecting a potential squeeze up until we actually have a failure here that breaks back down and goes lower into the structure. Something probably maybe more concise would be a further test of like 55K if we start losing, say, 58.3. So that's that. Take it easy and catch you tomorrow.